All right, guys, it looks like we are live. Welcome back to Roxham TV and also welcome back to Jam Crypto. Guess what? It's Friday today. Yay, we made it to the week. And it's very exciting today is because we are at October. And so far, the narrative of October is playing rather well, I would say, because we touched 121K. That's exciting even though we are correcting a little bit. I kind of expected because like 121K is a huge rally. So having a minor correction is nothing too concerning. Of course, we're going to look at the chart in a bit. We're also going to do a little bit of on-chain analysis and then follow up by some news analysis. As always, we're going to talk about taxes because I'm personally very bullish on taxes. They are doing some amazing things, like they are contributing to the AI world and also the crypto world. They are quite innovative when it comes to AI and especially crypto because they have been quite friendly out of all the states in the US. So I'm liking what I see on the news. And also, we're going to talk about AI because AI, you know me, is one of the areas that I like the most. And I personally invest in the AI quite a lot, especially in Tesla. I talk about Tesla quite a lot on this channel. We're also going to dive into some drama. So UK just got like billions dollars worth of BTC. What are they going to do with it? And why is China coming into play between some drama like this? So lots of exciting news we're going to talk about. But like first job, if you it's the first time seeing my face, make sure to subscribe to Roxham TV and also my own YouTube channel, so Jam Crypto. I do my show Monday to Friday, 4 a.m. Eastern time. Well, I do want to finish this show on time because I have a dinner to run after the live stream because it's Friday. And also my friends are celebrating my birthday with me. Well, today is not my birthday, not the exact day, but usually because I have a lot of dinner plans, my friend would just like schedule a time with me in October. They were like, okay, I know October is your birth month, so save one day for me. So I'm gonna, after the live stream, I'm gonna head out, I'm gonna see my friends, gonna have some nice food and nice drinks and nice conversation. All right, so I'm very excited for today. I'm very excited for Bitcoin. Without further ado, let's dive into the chart, like what we are seeing here. All right, so Bitcoin right now is sitting at 119K, 119.7K. So it's correcting a little bit. So down from 121 to right now, I mean, it's just a 1%. So maybe some people were, okay, what's going on? I thought we're going to the moon, but again, like if you zoom out, Bitcoin has done tremendous thing. Like we pumped 10% in just 4 days, 4 days and 8 hours. We pumped 10% to 121K. So it's okay for Bitcoin to take a break. And that's what we saw just like a few days ago. So that was back in 30th of September, like coming the end of September, people were saying, okay, September is always a red month. It's very nice to see that we end up seeing a positive number. So 5% pump in the month of September. Of course, we know what they say about October. Like October is going to be October. So far, even the first few days, like we are today on 3rd of October, and we are still seeing these narratives are playing rather well. So that's a good sign. But again, like 121K. So I would say between 120 to 121, there's some resistance forming here. But after that, it's basically a free leg up, I would say. Like the reason why I would say it's a free leg up to test to all-time high is kind of what we could visualize from the VRVP, but of course we're going to dive into the daily chart. But what I'm seeing on the hourly is that Bitcoin is really using that new support line. So around 117.5, we are seeing that's at a new support line. So there's still a lot of room for correction, but like I think there is, okay, okay, 1.7% till we get to 117. So this like tiny correction right now, 119, that's nothing. That's like not too concerning. And again, like when we seeing a massive leg up like this, it's okay to have a little correction. Like it's fine. So just zoom out, and when you see things on a daily time frame, then you know what I mean. So of course, we are here on the daily. One thing about the daily is that I kind of want to pull out the RSI. All right, it's a little bit confusing here. Let me remove the line. So one thing interesting about the RSI is that we are forming this downtrend. We have been forming this downtrend since mid-July. And one thing like really bullish that I saw from Bitcoin is that we broke out of this downtrend. So that is a bullish sign for Bitcoin that I saw. So that's one. RSI being broken out of the downtrend. And also, if we go ahead and pull out the VLVP, because we mentioned VLVP a little bit on the hourly, but if we zoom closer, you know what I mean. Like, why would I say 120 to 121 is the new range? Like the new range that I would like to watch, that I see Bitcoin is getting a little bit of resistance. Maybe we'll be like trading inside this range of 120. So like, okay, look at this like daily candle. So we were trading inside a little bit, but it's more like a wick. You see, there's like so much price data inside this range. So here there's another wick, and then 2, 3, 4. So 1, 2, 3, 4, 5. There are 5 wicks inside this range. So I'm eyeing 120 to 121. This is a critical resistance that we are watching. But like after this, what I would like to focus here is actually on the bar on the left side. So VLVP. So take a look at this volume. So you can see this, like the volume has been going down as the price goes up. What does this mean? Is that, okay, once we get to this level, so 121, 121.1K to be specific, once we get to here, you see the volume is gradually going down. What this means is that, okay, we're gonna need less momentum for the price to go up, because there isn't much price data to support this price range. So it's much easier for the price to go up. So what I'm eyeing closely is that, okay, for this candle, if we manage to close above like 120, or even like close within this like region, this range, that's another bullish sign for me. So if we manage to, okay, maybe find some support, like retest this level as support, so 120, it should be like, from a technical standpoint, we should be testing all-time high of 124 rather soon. This is just what I'm seeing from the daily chart. Again, it all depends on this region, so 120 to 121. Let's see Bitcoin, if it's founding this as resistance, then yeah, like even if we do get resisted from this level, it's not the end of the day. We still have 117, and then we could like test it again. Because one thing about resistance is that if we consistently test the same resistance, like eventually we're going to break up. So that's on the daily chart. Let's also hop onto the weekly charts, just so we could look at things at a higher time frame. And let's go ahead and remove this. Like one thing about the weekly chart is that, okay, people are saying that we're gonna see a cycle top, especially for the 4-year cycle believer. Okay, I'm one of the 4-year cycle believer. Don't get me wrong, but one thing I'm differ from them is that, okay, for the 4-year cycle to be completely intact, that means the cycle top is going to happen exactly on 6th of October. That means in 3 days. All right, so if for the 4-year cycle to be completely intact, then Bitcoin need to pump another more than 4%, so 4.3% in order to reach its previous all-time high of 124, right? So like a 4% pump for Bitcoin's book is completely doable. It's not like impossible, because right now we are actually we're quite close anyways, but for the 4-year cycle folks, the believer when it comes to the 6th of October, then once we reach previous all-time high, or perhaps we go further, like perhaps we go further up more than 124, I don't know. And then for those believer is that once we reach this weekly candle, once we close that, Bitcoin is going to crash, and then we're going to see a bear market. So I do not think this is the case. Is that okay? For one of the reason is that let's pull up the RSI again. So the RSI, I kind of want to draw a critical level, like a line that I'm watching very closely. So around 63. So 63 is a level that I'm watching closely. The reason why I will watch this is that, okay, if we go all the way back to 2019, so we cross 63 here, and then we're going to see a rally. So same here, we cross here, but it looks like okay, Bitcoin still needs some time to go up, but like, okay, we cross again, see what happened. We have this like a major rally for the Bitcoin's price. So here's another one, and then we cross up, like though this time we kind of see the top rather quickly. So it lasted like 49 days for 68% pump. I mean, I'll take that. So that's why 63 on the RSI is an important level. And of course, we have like some breakout that happened here. So let me pull up the brush. So we have this back in 2023, and then we see what happened. That's like another major rally. Same here, another rally. So the point being that like 63 is a level we cannot fail. Like, of course, like none of the indicators are perfect. Here, 2024, we got another leg up, another rally for Bitcoin's price. So point being is that, okay, we are right now at the edge of breaking out on the RSI. So we are sitting at, okay, 61.5. When we get to 63, usually the momentum gonna pick up rather well and rather significant. So this is one reason that I don't believe that we're going to see a cycle top on the Bitcoin's price, because the RSI just simply saying that the top hasn't been in yet. Also, it kind of aligned with the VRVP. Again, we look at the VRVP on the daily chart, like we are very close to the breakout point. So once we have secured, okay, 120 to 121 as, okay, not the resistance, we can break out. So it's really easy for Bitcoin to test that 124, which is the new all-time high, which is the previous all-time high. So I eyeing this very closely. This is, however, just from a technical standpoint. Let's also hop onto the on-chain analysis, because that's what I'd like to do. We like to come up with a comprehensive analysis, not just technical, not just news, but all the data pulled together so that you guys can draw to the conclusion. All right, what we are looking at here, we are essentially looking at the Bitcoin Euphoria Zone. So, okay, this chart looks a little bit confusing, but bear with me. So this chart shows the Bitcoin Euphoria Zone using the MVRV ratio, so market value to realized value, a metric that compares Bitcoin's market cap to the aggregate cost basis of all coins. So when the MVRV ratio rises above its long-term average by more than one standard deviation, so what is one standard deviation? Okay, so this is the blue dotted line here. So MVRV plus one standard deviation, that's the blue line. And then we're going to also look at the MVRV plus two standard deviation, which is the red dotted line. So it signals overheated conditions where investors are holding extreme unrealized profits. So the green shaded area, like the green shaded regions that we are seeing here, have historically aligned with bull cycle moves as profit taking and distribution dominant, whereas the orange dotted line, so the orange dot on price, show us when the market is starting to get frothy. So with the red dot here, we can see the extreme top that calls for local on cycle top with like extreme price movement, obviously. So what this chart, like what this analysis is telling us, okay, the first two local tops of this cycle produce signals of a heated market. So that's like here in 2020, between 2024 to 2025. So this would be beneficial for traders trying to gauge a sense of momentum in the market. For long-term investors, cycles usually top with multiple orange signals of a heated market followed by red signals of an overheated market. So Bitcoin is currently less than 4% away from its all-time high, and this metric isn't even signaling any orange. Do you see like any orange right here? So there isn't any orange. That means it's not even heated, indicating there's a bigger move to come. So this is what it says, the analysts say, for the Bitcoin Euphoria Zone. Let's also hop on to the next chart. How about that? Okay, so what we're looking here is the short-term HODL wave. So we have crossed out all the long-term stuff, leaves out the short-term. So how do you read this, right? Okay, so the HODL waves, this metric, it visualized the distribution of Bitcoin supply by the age of coins since they were last moved on-chain. Okay, so there are different weights here. You see different colors, so different color bands. They represent a specific holding period ranging from 24 hours to 10 years, but like I filter out to 6 months and under. Especially we move to 24 hours because they're just essentially noise, so it's non-essential, it's non-important. That's why I removed it. Okay, so the analysis is saying that for short-term HODL waves, so under 6 months, are a visualizer, like a visualization for short-term holder supply, accumulation, and distribution. There are large spikes, of course, like large spikes up in supply within these waves during price appreciation, and large price drops, like drops down during price corrections. What we see now is that the short-term HODL waves are increasing, but still below historical relevant local tops. This includes the two local tops of this cycle. So we are seeing like this like yellow dotted line at $5 million, 5 million BTC. So when we go above this line, that means, it's a little bit overheated, right? So like, what we're seeing now is that, it's increasing, but still below historical relevant local tops. And This includes the two local tops here, so two local tops, with both tops hitting over 5 million BTC in short-term supply. And with the current total just over 4.6 million BTC, this suggests that this move up in price may not be done yet. All right. So that is one chart. And then let's move on to the final chart I prepared for you guys. So the final on-chain chart. So what we're looking at here is the popular price cycle top indicator. For those of you who aren't familiar with this metric, so basically this is a metric designed to identify cycle tops with high accuracy using only two simple moving averages. So we saw the 111-day simple moving averages and also the 350-day simple moving averages multiplied by 2. So it comes down to like two lines, so the purple line and also the blue line. So a pi cycle top signal is triggered when the 111-day simple moving average crosses above the 350-day simple moving average times 2. So basically the blue line go above the purple line. That's what he said. Okay, so what this analysis is telling us is that, okay, the pi cycle top signal has worked effectively at signaling the bull market cycle top in the past. Like these moving averages have crossed within a few days of the actual top in the past, making it one of the simplest yet effective cycle top indicators out there. Like, of course, it does not work for bottoms, and one important caveat must be mentioned is that all metrics will fail. Some are useful. There is nothing in the universe rulebook that says it must repeat again this cycle, but like it is data that we cannot ignore due to its historical accuracy, and it remains relevant until now. So with the pi cycle top signal far away currently, you see the blue line is nowhere close to the purple line. You see that, right? Like this suggests that the big move of the cycle has not happened yet. Like if history rhyme, which I mean, yeah, none of the indicators are perfect, but if a lot of indicators all combined with the technical analysis, all is telling me that the top is nowhere close, that's what I tend to believe. Yeah, even though I do think the cycle top going to happen in Q4, because I am a cautious investor, although I don't think we're going to see a top exactly on the 6th of October, I'm playing it safe. I'm playing it cautiously, and I'm gonna slowly, like as we move on, like closer to Q1 2026, I'm gonna slowly take some profit off the table, especially when it comes to altcoin, because I've been holding some of the altcoins all the way back from 2021, believe it or not, and it's quite painful. All right, so that's for the TA and also on-chain. Let's move on to some of the news. Like, of course, like we know the US is still going over the shutdown, and the shutdown is impacting some of the areas, like especially federal workers. There are 100,000 of federal workers. They are now being forced to go on unpaid leave, stuff like that. So non-essential stuff is basically on a pause. When I say non-essential stuff, I'm saying maybe, okay, passport issuance or national park. Those are non-essential stuff, while the essential stuff like military, of course, is still ongoing. But one impact that we're seeing, like, of course, the government, it doesn't look like we're going to get out of this in very recent. When I say recent, maybe like the in the next few days. Maybe we'll see this issue get solved in next week. I don't know, we're just guessing. But one impact that is kind of affecting the US economy is that there isn't much data. So when the Fed acts for, I don't know, like rate cuts, we need to look at the GDP. But since all the federal workers, they are not working, the GDP kind of decline a little bit, though it's just like short term. Like it's not too concerning. Mostly it's just far. But like short term wise, since we are seeing even the US government, the most powerful entity in the world, is going through some volatility, it's really good for our backs. Let's just put it this way. Because not only Bitcoin is close to its all-time high, gold is like already reaches all-time high and keeps breaking record high. So what we're seeing here is that people are fleeing from fiat dollars to hardcore asset like Bitcoin, like gold. So it's really good for our backs. All right, so that's for the macro. Let's also look at the some of the news of some states in the United States, because I personally like what I'm seeing. Some of the numbers here, Texas are looking really good. So if you guys don't know, like imagine if Texas were a country. So right now, the numbers that representing right now, okay, it would be the 8th largest economy in the world, even ahead of Canada, even ahead of Russia, and even ahead of Italy. So in Q2 2025 alone, just the previous quarter, Texas economy surged to an annualized rate of nearly 7%, more than a double of the US average. So let's break it down, like how Texas is powering past nations, like why companies basically fleeing California to set up store in Texas, and even like, okay, how Bitcoin and renewable energy are part of Texas right now, like part of the strategy, why Texas is being so strong. So let's talk numbers, okay? Let's do a little summary, and you guys gonna like what we're seeing here. So Texas economy isn't just big. It's built for resilience, opportunity, and long-term growth. With a 2.7 trillion economy, Texas ranks as the 8th largest economy in the world, outpacing, as I mentioned, Russia, Canada, Italy. So they're expanding workforce of 15.7 million strong, a diversified industrial base, and a strategic location that makes it a gateway for global trade. These conditions have helped Texas rank #1 in exports in the US for 23 consecutive years and attract more corporate relocations than any other state. That's interesting. And the state's business ecosystem is equally strong at the ground level, with 3.3 million small businesses, including a record 500,000 new businesses applications filed in 2024. So that's a lot of great numbers, but like, what is driving this great numbers? What is driving this great reports? Why people are going to Texas? Okay, it comes down to a few drivers, I would say. The first, like Texas have a really low when it comes to income tax. That there's no income tax. Okay, no income tax, and a really friendly environment for businesses. So that's one. And then second is the energy sector dominance. So oil, gas, and renewables. And then third is the population booming. So many people are basically migrating from other states to Texas. They're like, okay, 500,000 new residents in 2024 to 2025. All right. So there's also relocation, Tesla, Oracle, they're all moving to Texas. And five, okay, that is the most important thing I want to talk about, is that they are crypto friendly and they have a strategic Bitcoin reserve. And then final reason is that they have data center. So both crypto and AI, they are like one of the dominants in US. So I was just reading some of the article on CNBC. So look at this, like there are so these are America's 10 strongest state economies best prepared for a recession. Like the first one is Florida. We're gonna talk about that later if there are like more news to talk about when it comes to Florida. But today I kind of want to focus on Texas first because they are doing a lot of interesting things and I want to dive deeper. So today is for Texas. Maybe future we're going to talk about Florida. Okay, so federal employees make up less than 1% of the state's vast workforce. Like, this is interesting because we know for the shutdown that the current administration, they're saying that they're going to have thousands of people going to get laid off. And it's interesting to see when it comes to Texas, there is like less than 1% of state fast workforce. And while international goods trade is an important part of the Texas economy, only a small percentage of that trade, so about 6%, is with China. So it's relatively low. This is the general background and why I think is so interesting. Okay, like compared to the US overall, so Q1 2025, we saw 39 states contract due to inflation and supply chain issues. But of course, like by Q2, like most of the states rebounded. So not like a major concern when it comes to recession. But Texas and Florida, they are booming right now. They are leading with like at least 4%, like 4 to 6% growth, while California and New York lag at 2 to 3%. So again, I touched a little bit about why Texas would lead in some of these areas. They have no income tax. They have a really good incentives for companies, so 10-year tax reduction, something like that. Their energy dominance, so oil and gas still remain 10 to 15% of their GDP, but renewables energy is actually catching really fast. So Texas leads US renewable energy growth. And then we have like migration and then the infrastructure, like a strong port, growing AI and also data center hubs. We're also gonna touch upon that a little bit. But like so far, Texas has been so crypto friendly. They have state chartered banks can custody crypto. They have mining incentives. They have energy discounts. That's why actually a lot of Bitcoin miners, they move to Texas because, there's tax incentives and also there's renewable energy. So like the cost of living is relatively lower. And then Texas also have the strategic Bitcoin reserve. It's actually the first US state to officially invest in Bitcoin. Of course, they try to aim to diversify assets and position Texas as the crypto hub. So Bitcoin mining is still, I would say it's small when it comes to GDP, like 1 to 2%, but billions in impact and key to rebranding, or not rebranding, but like branding Texas as innovative. So I think that is more important. And when it comes to energy, they have like renewable energy, like solar energy, solar power to focus here. And also the government, they are investing a huge amount of money when it comes to renewables. So $64 billion being added in 2025 alone, with $148 billion overall. So it kind of creates a balanced economy. We have like oil and gas. So that is, of course, the traditional side of things. Now we have renewables and they are coming strong when it comes to renewables. And I really want to take the piss out of California because I don't know, maybe it's controlled by the left, so I really don't like it. Like we are seeing that businesses are fleeing California to go to Texas. There are 19 major corporations have relocated their headquarters from California to Texas. Like Look at the list. So Tesla, okay, Tesla moved its headquarters to Texas, Austin in 2021. And then we have Oracle and then Charles Schwab. There are, of course, different reasons, as I mentioned. There's like tax reason, and also when it comes to the energy, cost of living, everything is lower compared to California. And also like California, there's like so much crime and homeless. So like if I go there, like I wouldn't feel safe to be in California anyway. So it makes sense to move to a safer state in my opinion. But of course, that is not to say that like Texas is gonna be okay. Okay, Texas looks really good, but there's still some risk. For example, when it comes to the energy, okay, energy grid strain, like balancing oil, gas, and renewables under rising demand. There's also inflationary pressure, like since a huge amount of people basically moving into Texas, there comes inflation. I know taxes might be like slightly lower when it comes to the cost of living compared to a lot of other states, but like inflation might be slowly rising up. That makes sense, right? So those are the risks to consider. Yeah, I know. Like there are a lot of good things about taxes. If you guys, okay, once you're done watching this live stream and you're thinking, okay, I need to I need to move to Texas tomorrow because Jamie said so. Like that's not what I'm saying. There's still risk to consider. There's still challenges to Texas per se. But overall, Texas economy is outperforming the entire country. Okay, they have the strength lies in diversity. So traditional energy, renewables, and tech and AI and crypto. So yeah, everything is looking good. But the big question is that can Texas maintain this level of growth without overheating its grid? I guess time will see. What time will tell. All right, so let's move on to the next part of the next segment. The news that I've prepared for you guys is that, okay, UK and China battling for control of $7 billion in Bitcoin. So what's happening here? Like, this is really interesting. So this Chinese lady has pleaded guilty to a multi-billion-dollar Bitcoin fraud, but the legal drama is only just beginning. So if you don't know, like, okay, there's a big news making the headlines right now. So out of the US, like the UK government is sitting on one of the largest Bitcoin stashes in history. So 61,000 BTC, worth around $7 billion today, seized from a convicted fraudster. Now the big question is that will the UK sell it, hold it, or use it to pay back victims? And more importantly, what does this mean for Bitcoin's price and for crypto adoption and for governments around the world? So here's the news, like if you happen to miss it. So this lady, so her name is Yandy Zhang, so also known as Ximin Qing, I don't know how to say that, pronounce that. So ran fraudulent wealth schemes between 2014 to 2017, with most of the ill-gotten gains held in BTC. Victims were promised returns of up to 300%, which was simply too good to be true. Like when you see a promise like that, like make sure just run properly. 99% is going to be a scam. All right, so after this girl, so this lady, after arriving in the UK on basically a fake passport, she lived in a lavish lifestyle, renting a $6.7 million mansion in some parts of London, and her home was raided in October 2018, and it took 2.5 years before specialists uncover a staggering 61,000 BTC in wallets stored across several laptops. While the haul was worth about $1.7 billion at the time, its value has ballooned since then, hitting $7 billion. So shortly after Zhang was due to be questioned by detectives in 2020, she disappeared without a trace. Years passed before she was arrested in northern England town of York in April 2024. While her guilty plea means a trial would no longer need to take place, there's a bigger issue at play, like what would happen to the Bitcoin that's been seized. All right, so that's extremely juicy. That's a really good, segment. So basically, the UK, there are three options on the table. First, they can sell it, and UK kind of need that because they have 22 billion pounds in deficit. Like selling $7 billion would help cover a little bit of deficit. Of course, not like whole, but like it's good to cover a little bit of that deficit, right? So that's option number one. Option number two is that the UK could hold that BTC and create a national Bitcoin treasury. And option number three is that will UK be the good guy and compensate the 128,000 victims in China? Okay, comment in the live chat what would you do if you were the UK government? I mean, it's very tempting. Like, would I be the good guy if I see like $7 billion? I mean, there's humanity, right? So I don't know if I could. I would do the right thing. I'd be the good guy here. But comment in the live chat. What would you do? All right. So this is very. Since 2022, like the UK has positioned itself as a global crypto hub with stablecoin regulations and DeFi and staking rules and stuff. But there's still like reality hitting the UK. They have 22 billion pounds budget deficit, and I would say I don't know. I don't really think it will sell off that BTC. Seems that they're really trying to position themselves as the crypto hub. So can you still call yourself a crypto hub if you just dump your BTC like Germany did? I mean, of course, I'm gonna, whenever I see a chance, I'm gonna take a piss out of the German. I think what they did with Bitcoin is extremely stupid. So let's now take a look at the chart, like the amount of BTC held by each country. So of course, US coming at number one, they're holding 198,000 BTC on the balance sheet. Second comes at China, so 194,000 BTC, and then that one is UK, so 61,000. All right, so I would say the fourth one and then the fifth one is quite surprising. So Ukraine, of course, like some of that crypto would be used as part of the defense financing, and also Bhutan, they have like 11,000 BTC, partly mined with hydropower, treated as a strategic asset. So that's interesting. So out of all the governments in the world, they control like more than 2% of the BTC supply. But whenever I see Germany, I like to make fun of them because back in last year, 2024, Germany seized 50,000 BTC and sold it at $57,000 on average for $2.8 billion in total. So if they were just like they held through that BTC, if they didn't sell that 50,000 BTC, they were now sitting at least $5.9 billion. So that's a miss of $3 billion in gains. Yeah, I mean, I see a lot of memes for Germany calling them paper hand. Yeah, I mean, just go on Twitter, and I usually have a lot of fun just like reading the memes because people like some of the people on Twitter, they're really creative. All right, but let's come back to the UK. The options that they have, like they can sell everything and be the good guy. to pay back the victim, or they can use it as Bitcoin treasury. Like if they do so, that will send a strong signal. Like UK is really serious about being a crypto hub, and BTC as a hedge against inflation, as a long-term gains. And the third option is, of course, to held it to as wait, where is it? So victim compensation without selling, like use remission programs under UK's Proceed of Crime Act, and provide fiat payouts from other assets like a real estate or cash to keep BTC untouched, or maybe set up a trust fund while victims would receive payouts from BTC future appreciation. Well, I do think it's going to be a hybrid. So maybe they will sell a partial, like a part of that BTC, and then they're going to pay the victims, and then they reduce a little bit of deficit. Partially, they're going to hold the BTC to become a national BTC reserve. And I mean, hybrid is most likely because they want to avoid the Germany regret. But like what the UK gonna do, it will set the precedent for how governments worldwide treat seized BTC. So I'm eyeing this very closely. Very interesting to see how this drama develops actually. All right, so that's for the seized BTC. Let's move on to some AI, because you know me, I love AI. Okay. So the AI data center boom is driving up electricity costs. I do want to focus more on the power usage, the energy usage side of things of AI, because we talk about Texas, and Texas has like renewable energy. So it makes sense to talk about the data center that all this AI is basically consuming. All right, so AI isn't just changing how we work, it's actually changing our power bills. In hotspot side, okay, in Texas, okay, we're really bullish on Texas, but the problem is electricity prices have skyrocketed, like up to more than 200% in just 5 years because of the surge in AI data centers. And this isn't just about cost, because AI global energy demand is on track to rival that of entire countries by 2030. So let's break down some numbers and compare AI to Bitcoin mining, because when Bitcoin came out, it was like criticized by everyone. Okay, Bitcoin consumes energy, but guess what? Every single thing on this planet Earth consumes energy, and AI is consuming so much more energy compared to Bitcoin mining. Okay, the reason why AI needs so much energy is that AI data centers, they need massive power consumption. So there are different states in the US, for example, Virginia, Texas, Georgia. So we're seeing like electricity price surge because of these like AI. And Deloitte, they are having this prediction. So they project like 123 gigawatt demand by 2035. So just to put things in context, is that it's going to be a 30x compared to today when it comes to the energy usage. So in 2025 alone, industry spent like $475 billion on data centers, and it's up like 42 years in just like this year. So that's really crazy, and the number looks like it's just gonna go up. And this tends to be the whole trend of like global wise. It's not just the UK or just not the US. All right, because like for let's say GPT-3, like ChatGPT-3 training, it requires like more than 1,000 megawatt per hour, and that is already enough to power for 120 US homes for a year. So that's crazy. That's just GPT-3, and when it comes to GPT-4, it's going to be like at least 10x, so 10 to 100x more due to scaling laws. And then there's also the inference load. It adds up. So a single GPT response, it would take like 2.9 watt. And guess what? There are billions of daily queries, rival training costs over time. And when it's come to cooling, because it has to cool down, right? So that's another 40% of data center energy. Just GPUs and TPUs, they generate heat. So when it's overheated, like you need to cool down. And when you cool down, you need more energy. So that's why AI is so power hungry, basically. And one thing I want to look at in today's content is that we know that there are basically two nations in the entire world that is really competing in the AI field. And there are only two countries. Like the rest is like basically non-existent on a global scale. So of course it's going to be China versus the US. So look at this chart. Like China is coming really close, and it's like when it comes to the AI development, is really like it's rising at a rapid pace. So in 2024, US-based institutions produced 14 notable AI models, significantly outpacing China's 15 and Europe's 3. While the US maintains its lead in quantity, Chinese models have rapidly closed the quality gap. Performance differences on major benchmarks such as MMLU and human evil shrank from double digits in 2023 to nearly parity in 2024. Meanwhile, China continues to lead in AI publications and patents. Yeah, so I am very interested to see which one play out. But I personally, because I go to Shenzhen a lot, and Shenzhen is arguably the most innovative and most like futuristic region in China. And I do test there are some of the robots that are basically very advanced. I didn't know it was exist. I like literally like if you walk out of the border, there are like vending machines, there are robots delivering like latte art, delivering in a hotel, maybe delivering food. So the robot would actually go to the lift and then go up to your floor and then go knock the door, not really knock, but like ring the bell to deliver food for you. So there's a lot of amazing stuff, and it has been like that for years. Yeah, so I don't know, like it's very interesting to watch how this play out. But yeah, this is just one aspect when it comes to AI. Like if you can find a way to dominate AI, basically you're going to become a new world leader. So that's another interesting aspect I'm watching. All right, so when it comes to the energy side, because we are talking about energy and taxes, what we are seeing on this chart is that basically, crypto is right here, like the red one. And then AI is up there, the pink one. Like AI is consuming so much more energy compared to Bitcoin mining. And people are saying that, in 2030, AI alone could double crypto's footprint. And if you also go to, just like type up this question on Google, and then AI data centers currently consume more energy globally than crypto mining. So I just find it interesting, like why when Bitcoin came out and then presented this like Bitcoin mining idea, there's like so much pushback, so much criticism, while AI is basically being seen as productive, like it's backed by governments. And yeah, there's so much, basically even subsidies from the US government. I think one reason is that AI is backed by Google, it's backed by Meta, Microsoft. So they are they are extremely powerful. They arguably they might be even more powerful than the US government, and they have huge lobbying power. So when they're wealthy, when they're rich, is saying that this is a good thing, like they have the right to consume as much energy as they want. Whereas Bitcoin, because we started as a humble asset, then we didn't get to enjoy that benefit when we started out. But guess what? Like in 2025, we are seeing nations are getting into Bitcoin. Like, look at this list. I just think, okay, like there are more companies will join this list, and also like these companies going to increase their Bitcoin holding as well. That I do see as a trend. All right, so that's pretty much all I want to cover in today's content. So we cover like AI, we cover taxes, we cover the drama between UK and China. So just before you go, the final call to action. So make sure to go give me a follow and on gemcrypto_io. That's my Twitter handle. And also make sure to follow Roxham TV, because we have like regular updates, regular news that you probably don't want to miss. So yeah, that's me coming on live to you on Roxham TV. So thank you so much, guys, for watching. Oh, Bam Crypto, thank you so much. Thanks for the birthday wish. So I'm gonna head out and enjoy my birthday dinner. Although I think I'm gonna have a marathon of birthday dinner in October, because that's usually what happens. Like October is my favorite month. Of course, it's my birthday, but it's October, and we are seeing the narrative playing really well. So thank you so much for watching. There won't be a live stream on Monday because it's going to be my day off. More birthday dinner. So it's not, again, it's not just birthday, but it's like Mid-Autumn Festival in Hong Kong. So I'll be taking a day off for just live stream, but like same time. So on Monday, you're gonna see my interviews. I literally just like finished an interview before I hopped on this live stream, and it will play out on Monday, 4 a.m. Eastern time. So make sure to follow Roxham TV. You're gonna see my interview on Monday, 4 a.m. Eastern time. So thank you so much for watching, and I'll see you guys on Monday interview and also Tuesday live stream. Okay, bye.